Hey guys, it is almost time to buy the freaking dip. I released a video pretty recently highlighting the setup. We actually have 5 waves up in almost all the cryptos. Right here, 1, 2, 3, 4, 5. This is Bitcoin's 5-minute chart. And we are in the midst of a 3-wave correction, and we are almost in our buy box for Bitcoin and Ethereum. The same applies to a lot of other cryptos. So I'm going to have more videos on that. But if you want details on that setup, please check out my video from earlier today. What this video is going to go over is the risk reward score spreadsheet. So that will be linked in the description below. And disclaimer, I didn't have a chance to go and review all the cryptos that I wanted to. So there may be some errors. It's a continually updated document. It will change over time. Forgive me if I have any errors in there. And the final part of the video will be my buy strategy. So how to buy, how to diversify, and how to utilize the scoring system in order to make the best decisions for yourself. I'm going to jump right to our risk reward spreadsheet. This is linked to below. And I have an explainer video that goes into great detail explaining all the nuances of this. So please check that out if you're inclined. Otherwise, I'm going to go over this thing relatively quickly here. What we have is our risk score, our max gain score, and our total composite. That is shown over here at the right in pink. And the risk is really a safety score. It is telling us how safe of an investment that crypto is, how dependable the setup is based on its history, which is the age, how long has the crypto existed, and its structure, whether it's an impulsive setup, a diagonal setup, or a corrective setup. Impulsive setups are the best, corrective setups are the worst. Those two things are combined to give us a risk number. That's what that risk factor is, the safety score, whatever you want to call it. All the names are pointing the same thing. Then we have our max gain score. That's kind of like the reward side of it. So that is comparing what our upside targets are, both short-term and long-term, as well as the confluences. So how many Fibonacci extensions have confluence overhead at our high-end targets? So those are all combined to give us the max gain score, which gives us the best combination of what is going to be the most lucrative crypto based on, again, Fibonacci extensions. The total score is the product of our two subscores. So your risk and your max gain scores are multiplied to give us the total composite score, which is a combination of which ones are the best overall cryptos to invest in. So which ones give you the best bang for the buck, really, the best risk reward. This is going to be continually updated. As I mentioned before, there are new coins that I'm adding. Before I look at any new coins, I'm actually going to reanalyze all the coins that we have in existence. Some of them I may reinterpret just to make sure we have a more accurate outlook. Some of the fib extensions overhead have changed because of the recent price movements. And you can kind of see at the bottom, we have some new coins being added. I know some of you have requested other coins be added as well. So I've started adding those at the bottom. So stay tuned for those updates. I'm going to keep posting these in the community posts so that you guys can get the latest updated spreadsheets. So these are based on the prices from 2/26 today, February 26th. We rank everything in safety order. The safest coin to invest in is Bitcoin. That should be pretty obvious. It's got the longest history. It's got a very clear bullish setup. It's impulsive, a variety of factors. And really, some of the older coins have the most safety up above. Other coins that are relatively safe to invest in have very good bullish setups. They could be 1-2-1-2s, Nessus setups, things like that. I know Stellar Lumens is up there. My recent Stellar Lumens video highlighted how lucrative of a setup we have in there. However, these scores are deceptive, and as with any scoring system, there are some caveats. So I'm going to lay those out right here. So Stellar Lumens has a hidden risk. It has a zigzag-looking rally that started off in 2021. So I'm actually going to shift to that real quick just to demonstrate what I'm talking about here. So Stellar Lumens has a corrective looking bounce. And if you guys recall, I have that blue alternate pattern that could mean we have a short trunk at the top before another dip. So just something to be aware of, that it may not be as safe as it looks up there. EOS is also one of those cryptos. It ranks pretty well in the safety score, but as you guys know, we have that black hole below. And again, we're very close to invalidation. I don't think we're going to invalidate. There's some risk inherent to EOS. And finally, we have SHIB, which is the other way around. It is actually safer than it appears. SHIB is actually almost towards the bottom here. And the reason for that is that our history is very short. I don't have any history going back before May 10th. So it gets a huge deduction, even though it has one of the best setups of any of the cryptos. It's got only one confluence. That's another hit to the overall score. But we have incredible upside targets, and our structure is very clean impulse. All that stuff's there. So that's just something that might be underrated based on the safety score. The next thing I'd like to go over is the reward. So your max gain score. And up on the top is Dash. I'm going to be talking a lot about Dash because it is looking fantastic, both from a returns perspective and a safety perspective, followed by Doge. That's right. The meme coin may be one of the best cryptos to invest in. It's got a lot of upside structure to it. Then we have other coins such as EOS, Stellar Lumens, Polkadot, even Chainlink is up there. Several of these cryptos have very high upside targets. Again, this is the short term, which would be your third subwave or the A wave up if you're in a diagonal. And these are averaging anywhere from, they're averaging about 15x returns potentially, these top 5-6 coins. The long-term returns are pretty spectacular too. I'm not even going to read what that number is because that is insane where we could be long-term. So lots to get excited about there. There's some notes that I want to make here as well, such as with Uniswap, Solana, Filecoin, and Polygon. But before I do that, I'm actually going to shift over to the overall score just to display that first. So on these, we have Dash, which is on top. You know, I don't really have to say too much more. Pretty good balance, been around a long time, very good setup, lots of confluences overhead. Doge, again, meme coin. That is very good all around. XLM, I noted why this might be riskier than it appears, but the setup is the setup. EOS, Chainlink, again, these are all coins that have a very good balance of risk reward. Polkadot is up there despite its short history. The upside is so incredible that, and it has a 1-2-1-2 setup, that it finds itself up top. So it is a coin that may be higher risk, even though it has a good overall balance of risk and reward. And so this brings me back to that point. So Uniswap, Solana, Filecoin, and Polygon, a lot of these have incredible setups to the upside, but they need a little bit more of a resolution. I'm actually going to shift back to my chart to show you what Filecoin looks like. This is a coin that I have not done analysis videos on, but I was a big fan of it before this big crash came in. The way this is set up, this looks like a very proportionally correct 1-2 setup. It looks like a clean impulsive 5-wave up to the May 2021 top, actually March in this case, and a clear zigzag pullback. So this looks like a perfect 1-2. And if this is a 1-2, the upside is absolutely mind-blowing. I'm not even going to read those numbers. However, because of the limited history and because we don't have anything impulsive in the shorter term, I would like to see a small first wave, like a 5-wave impulse, and a corrective wave 2 pullback before I'm going to deploy cash in that. I would definitely be a buyer at that point. So that is one example. But again, I'll repeat those again. Uniswap, Solana, Filecoin, and Polygon. I have a second mark on those. And what I mean is I buy them on a larger second wave. I'm not buying those yet for that reason. There's some new coins, as I mentioned earlier, at the bottom. So Neo, Siacoin, NKN, a couple of others. I haven't completed the analysis. I have some pretty spectacular upside targets just based on the limited analysis I have done. And I would assume we need a 1-2 setup first, but those are just right now set up as second tranche items. I probably won't buy those on this current round. I might wait for that bigger 1-2, just like I would for Uniswap and some of those others. So just letting you guys know. But this is, in summary, our best cryptos to invest in, big picture overall. So now I'm going to shift over to the buy strategy. We tend to have cryptos that we become attached to and that we like a lot. And well, we don't always want to diversify and buy their cryptos. And I understand that. My message to you guys is I'm recommending don't buy just 1 or 2 cryptos. That's too few. I understand if you're buying Bitcoin or Ethereum, I think that would be the only time I'd think be permissible. Maybe you only have Bitcoin, maybe you only have Ethereum. And I'm actually going to bring back the safety score again because at least Bitcoin is towards the top of our safety score ratings. And Ethereum, just because of how long it's been around, how good of a setup it has, it's up there as well. Really, like I said, Stellar and EOS, those are probably not as safe for the aforementioned reasons, but those would be fine if you're not really into the speculative side. If you want the big gains, you want to get some high risk, high reward stuff, then I would definitely recommend having at least 7 or 8 cryptos. In my opinion, however, once you get past about 12, it's probably too much. There is a famous word coined by Bill Ackman, who is a pretty well-known investor. He has a word diversification instead of diversification. And what he says is that once you get over a certain number of stocks, it becomes counterproductive. You don't get much of an increase in safety or a decrease in volatility, but you increase the transaction fees, the maintenance, all the other stuff. If you have too many cryptos flying around, if you use Coinbase or something like that, those transaction fees can eat you up. So I'm not a big fan of getting any more than that, but that's just personally my strategy. If you're into buying 20 or 30 cryptos, knock yourself out. If you're attached to just 1 or 2, I highly recommend buying some more cryptos. There's a lot of good choices up here. Next thing I'm going to go over is that we do have high risk cryptos and we have low risk. So in a lot of stock portfolios, you have a certain allocation of high risk, high reward stocks. Maybe you get some speculative stuff like, what was that NIO car company, Tesla competitor, or even Tesla itself was one of those speculative stocks. You can have a small allocation in your portfolio of like really lucrative, high risk, high reward coins. So if you're a little nervous and you don't want to overdo it, maybe buy some Shiba Inu, maybe a small allocation of that, and throw in some Uniswap and Ethereum Classic. Maybe it makes up 15, 20% of your crypto holdings. And then maybe the rest of it, maybe the other 80%, you go safer. So you could go rank this in safety score order, risk score order. And maybe the majority of your portfolio is made up of Bitcoin and Dash and Ethereum, things like that. That's one way to kind of apply those same lessons that we learn in the stock market investing world to the crypto investing. Next thing would be diversifying your purchases. So we've talked about diversifying our coins, but it is also important to diversify your purchases, when you purchase, how you purchase, all those things. This is our Bitcoin chart once again. So I'm talking about buying 2 tranches in my other video. I'm very adamant on that. And the reason for that is that you never want to go all in at once. You never know if this is really the bottom or not. I could buy a tranche down here in this box, and then Bitcoin could keel over the next day. We may just get down to that 27, 28,000 range. You never know. If that happens, if that's the bottom, I can buy down there too. I get it on a discount sale versus basically, this is actually, again, a form of diversification. You're diversing your timing when you're buying, and you're also breaking into smaller chunks. Ideally, the ideal form of diversification is buying continuously at all times. That is theoretical. You can do that to some extent. Coinbase, buy a little bit each day. You can automatically set up. I think the fees would eat you alive if you did that. So that's one way. Dollar cost averaging, as I just mentioned or hinted to, is your ultimate form of diversification of your purchase timing. I was really pushing that a couple of months ago when we were still on the way up. And if you're not into that, you could do a hybrid approach. So what you could do is you could buy a big tranche, a lump sum down here in this buy box, and then you can set your dollar cost averaging just to go indefinitely, however many months you want to go, weekly, bi-weekly, whatever you want to do. That way, if we do dip lower, then you can continue to, well, you can buy the dip, you get your cost average down a little bit. If we do go up here, why am I going to buy tranche up here? My plan is because once you get through what we call the pivot, so let's say we only retrace, I don't know, 50%, that's about what we're projecting. Once you get past this zone, I would actually say the 0.764 zone, that's essentially a confirmation that we are in the next bigger third wave up. That won't be the last chance to buy, however. So this is our little 5 waves up, and we're in the middle of our correction. I know it's a little small, but bear with me. This projects up to about $49 to $51, $52,000. That would be a larger 5 wave impulse and a larger wave 1. And then we expect another fractal pullback, another wave 2, and then you'd expect another bigger 5 wave impulse beyond that. You'd get another chance to buy on the wave 2 down. And if that wave 2 comes down to about $40,000 or so, that's still a lot of upside. So if you're a bit more risk averse, or if you're looking for another place to deploy a large amount of money, that would be another place to do it. Basically, this higher degree up. You have a bigger wave 1 and then a bigger degree wave 2. This is the same case in most of the cryptos. If you are a little nervous about buying down here, it's not a bad idea to wait for a larger impulse to develop. That's actually what's going on in equities. A lot of Elliotticians are deciding to wait for a bigger 5 wave up before buying the dips. We're buying risk assets. So crypto is one asset class. The last form of diversification would be between asset classes. I know we all love crypto. I love crypto. Looks lucrative. The setups to the upside are pretty incredible. However, I highly recommend having other asset classes too. You should always have some cash, money markets, things like that. Stocks, mutual funds, ETFs. If you have a lot of money to spare, I would recommend having at least some of that. I personally have a lot more in equities and things like that than I do in cryptos. Cryptos are still a pretty large chunk of my portfolio, but that's just another form of diversification because you never know. And as I've mentioned before, the sentiment causes a lot of these assets to move together. So I expect a pretty good rally in equities as well as cryptos and maybe even metals. Never know. I'm going to go over the actual percent breakdown of what I purchased once I've made my purchases because I might make some tweaks as I buy. So stay tuned for that. And if you enjoyed my content, I'm going to have a lot more detailed updates on the individual cryptos, why I scored them the way I did over the next several days and weeks. So subscribe that we don't miss those. If you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy trading.